Bitcoin has just dipped below $80,000 for the first time in months, leading to over $500 million in liquidations among long positions. This significant price drop raises questions about the future of cryptocurrency. Here's everything you need to know about today's shocking event. Bitcoin has recently experienced a significant drop, falling below the $80,000 threshold, raising concerns among investors and market analysts. This decline comes amidst a broader trend of volatility in the cryptocurrency market, which has seen wild price fluctuations over the past year. Over the last 12 months, Bitcoin reached an all-time high of nearly $100,000, only to face a series of setbacks that have left many questioning the stability of this digital asset. The recent drop has sparked intense debate about the sustainability of Bitcoin's rally and the potential implications for the future of digital currencies. Historically, Bitcoin has demonstrated resilience, often rebounding quickly after sharp declines. For instance, in 2021, similar downturns were followed by impressive recoveries, suggesting that if this pattern holds, we may see a resurgence as bargain hunters emerge, eager to capitalize on lower prices. Analysts suggest that if Bitcoin can stabilize around the $80,000 mark, it could regain momentum and attract renewed interest from institutional investors. On the other hand, if bearish sentiment prevails, the cryptocurrency could face increased selling pressure, leading to further liquidations. This scenario could test critical support levels, potentially pushing Bitcoin down to $70,000 or lower in the coming weeks. The impact of these developments extends beyond Bitcoin itself, influencing the broader cryptocurrency market and traditional financial systems. Market participants are closely monitoring trading volumes and investor sentiment, as these factors could indicate the overall health of the market. Furthermore, official statements from major exchanges and regulatory bodies are likely to shape investor confidence and may either mitigate or exacerbate market fears. As we look ahead, the actions of key market players will ultimately set the tone for the weeks to come, with a critical focus on whether Bitcoin can reclaim its upward trajectory. The recent price fluctuations of Bitcoin are rooted in a complex interplay of factors that have captivated both investors and analysts alike. Over the past few months, Bitcoin experienced a dramatic rally, climbing to over $80,000. This surge was fueled by increasing institutional interest, with major financial firms and corporations investing heavily in the cryptocurrency. Notably, companies like Tesla and Square have made substantial investments, further legitimizing Bitcoin's role in mainstream finance. Positive regulatory developments, particularly in the United States and Europe, have also contributed to a sense of legitimacy surrounding Bitcoin, attracting a broader audience. However, as prices soared, traders began to leverage their positions, hoping to capitalize on anticipated further gains. This speculative behavior created a precarious situation where significant downturns could trigger widespread liquidations and exacerbate market volatility. Historical context reveals that similar price drops have occurred in the past, often following periods of rapid growth and speculation. The 2021 bull run serves as a stark reminder, as prices fell sharply after reaching new highs, leaving many investors wary of repeating history. Understanding these dynamics is essential for grasping the current market sentiment and the motivations of key players in the cryptocurrency space. The recent downturn has sparked fears of a bubble, prompting some investors to reassess their strategies and risk tolerance. The impact of these fluctuations extends beyond individual investors. It influences broader market trends and regulatory discussions. As Bitcoin's volatility continues, regulatory bodies may feel pressured to implement stricter guidelines to protect investors. Looking ahead, analysts suggest that the market may stabilize if Bitcoin can establish a new support level amid these fluctuations. For investors, the focus will be on whether institutional interest can withstand the current volatility, which will ultimately shape the future trajectory of Bitcoin and the entire cryptocurrency market landscape. Bitcoin's recent drop has sent shockwaves through the cryptocurrency market, with immediate consequences that are being felt by investors and institutions alike. Over $500 million in liquidations occurred as many retail traders who had leveraged their positions in hopes of maximizing profits now face significant financial setbacks. This rapid decline in value is not merely a number. It represents real losses for countless individuals and families who invested in the digital currency, often based on its perceived potential for high returns. The psychological impact of such volatility cannot be understated. It breeds fear and uncertainty among investors, prompting some to exit the market entirely in search of safer havens. Historically, Bitcoin has been known for its price fluctuations, but this recent downturn raises critical questions about market stability. The cascading effect of panic selling could lead to further price depressions, creating a vicious cycle that may be difficult to break. Moreover, the decline has attracted the attention of lawmakers and regulators, who are increasingly concerned about the implications of such volatility on consumer protection and market integrity. Regulatory scrutiny is likely to intensify as authorities seek to understand the root causes of these price movements and their broader economic implications. For the average person, the ramifications of Bitcoin's decline extend beyond individual investments. The cryptocurrency market is often viewed as a barometer for overall investor sentiment within the financial landscape. If Bitcoin struggles to maintain its value, it may deter new investors from entering the market and hinder institutional adoption, which has been gaining momentum in recent months. This could lead to a stagnation in the development of blockchain technologies and innovations that rely on cryptocurrency as a foundational element. Looking ahead, the future of Bitcoin and the cryptocurrency market hangs in the balance. Investors will be closely monitoring upcoming regulatory developments and market trends to gauge their impact on price stability. The potential for recovery exists, but it hinges on the ability of the market to restore confidence among participants. If Bitcoin can stabilize and regain momentum, it may pave the way for renewed interest and investment in the cryptocurrency ecosystem. On May 17, 2026, Bitcoin's price plummeted sharply to $78,000, marking a significant decline from its previous high of over $80,000. This sudden drop occurred around 10:30 a.m. UTC, triggering massive liquidations across cryptocurrency exchanges. Approximately $500 million in long positions were liquidated within hours as traders rushed to adjust their holdings amid the rapid price decline. Major exchanges like Binance and Coinbase reported a surge in trading volume as anxious investors reacted to the unexpected market shift. The most striking aspect of this event was the speed at which the market responded, underscoring the inherent volatility associated with cryptocurrency trading. This decline comes on the heels of a sustained period of stability where Bitcoin had maintained levels above $80,000, leading many analysts to believe a new support level had been established. In recent weeks, Bitcoin had experienced a rally driven by increased institutional interest and positive sentiment in the broader crypto market. However, today's decline appears to be primarily market-driven, influenced by profit-taking after this recent surge. Traders often capitalize on gains following rapid price increases, which can lead to cascading sell-offs, especially in a market characterized by high leverage. The impact of today's decline reverberated beyond individual traders. It raises concerns about the overall health of the cryptocurrency market. Analysts suggest that such volatility could deter potential investors who are wary of sudden market shifts. Moreover, the liquidity crisis triggered by these liquidations may lead to further price instability in the short term as traders become increasingly cautious. The decline has sparked discussions among market participants about the sustainability of recent price rallies and the potential for a more significant correction. Looking ahead, market observers are closely monitoring Bitcoin's performance to determine if it can recover above the crucial $80,000 threshold. A failure to stabilize could indicate a broader trend of declining confidence in cryptocurrencies, potentially influencing regulatory discussions and investor sentiment. As the market digests today's events, many are left wondering whether this is a temporary blip or the beginning of a more significant correction, with the next few days likely to be pivotal in shaping Bitcoin's future trajectory. As we consider Bitcoin's volatile trajectory, Will investors view this drop as an opportunity, or is it a sign of deeper issues in the cryptocurrency market? Share your thoughts in the comments and subscribe for more deep dives into the latest news.